Then I looked at Bitcoin and ETH and they looked identical, except ETH was earlier. Then I started putting the price of ETH at 5 million wallets and Bitcoin at 5 million wallets. It was exactly the same price and the price structure was the same. And we know it by the number of developers working on it, the number of applications working on it, and the number of wallet addresses, the rate of increase. So it's growing at about twice the speed of Bitcoin right now. So ETH's growing at about 100% a year, and Bitcoin's growing about 50% a year. The entire digital asset space growing about 113% a year, which is twice the speed that the internet grew at. So this is the fastest adoption of any technology in all recorded history. And ETH is the front runner right now. Now, it doesn't mean it always will be, but right now it's clearly winning network effects. And therefore, I think the network is undervalued.
I talked a long time about the tokenization of the world, so I kind of got the whole concept. But Bitcoin was the pure play for the economic situation we were in, right? Made the total sense, right? Easiest narrative, first port of call, lowest down the risk curve. So that made sense. But as the rally started broadening out, we know that over time people move further out the risk curve. The next one out the risk curve is Ethereum, and then you can go all the way out to some brand new protocol that nobody knows whether it's going to work or not. Started looking at the chart of Ethereum and thought, this is a really great chart. So I started writing about it, and particularly the ETH Bitcoin cross. So I started writing about it a bit, and hilarious. I mean, I write about it in Global Macro Investor, and they're all kind of institutional guys, hedge fund guys. They're all like, oh, that's fascinating. We put it on Twitter, and was like, how dare you? You're cheating on us. I'm like, what? And then I started getting called a shit coiner and a spammer. And I'm like, wow, if somebody tells me not to do something, I'm absolutely going to go and do it. If I look at the chart of Ethereum versus Bitcoin, it looks like it's basing. Usually, Ethereum is also very much following the 2017 Bitcoin cycle, both in price, in number of wallet addresses, in market cap. I mean, it's identical. It's kind of spooky, which tells you this is being driven by Metcalfe's law and adoption effects than almost anything else. So if that's the case, then we know Ethereum has a decent chance of getting to 20,000, considering right now it's at 11,800. 1,180.
Yeah.
I mean, holy shit. That's a value proposition. One of the things was, well, obviously Bitcoin has network effects, but nothing else does. And therefore these utility tokens go to zero. I'm like, let me check on that. So I just plotted them out. In fact, to be true, Remy plotted them out because he's better at Excel spreadsheets than I am. And he plotted them out. And guess what? You put on the number of wallets and the price, and lo and behold, there's a nice regression. They're basically to do with network effects. And then I looked at Bitcoin and ETH and they looked identical, except ETH was earlier. Then I started putting the price of ETH at 5 million wallets and Bitcoin at 5 million wallets. It was exactly the same price and the price structure was the same. So then I started realizing, well, maybe stocks to flow is actually just an extension of Metcalfe's law, and all of this is network effects. So I started then trying to understand more about Metcalfe's law, how it affected the mobile phone industry, the internet, and then stuff like Amazon, Facebook, Google, and all of that. And so that was the huge breakthrough for me, was figuring out all of this, and that ETH was actually gaining faster adoption than Bitcoin. Ethereum, I'm pretty comfortable with as well. But I also think that the entire digital asset space is going to be absolutely gigantic. And so I wanted exposure. So if my thesis is that network effects are the largest drivers of these things, so I went on to Twitter and asked people, okay, show me your best coin and why. So I got 6,500 replies. But what I did was just skim through and look at, okay, what are most people involved in? What do they care about? Where is the reasonable analysis coming from? So I got a basket of 10, equally weighted. It's only 10% of my portfolio. It's actually gone up 100% in a month and a half. But it's 10% of my portfolio. And I just took an equal weighted basket and said, look, I don't know, I'm not smart enough. I figured that the space will go up because the risk curve goes up when the bull market goes. And within that, I'm going to learn a lot about this space, about which one is which, what's working, what projects are really getting network effects. And that's okay to do, because let's say Raoul's a total idiot, 10 out of 10 go to zero. I lose 10%. Last time I checked, Ethereum was up 10% today. I don't care. That's how you take risk. One of the reasons I don't believe that it is the only asset. I think it is a pristine asset. It has attributes, but it won't be everything. So the whole space looks like it can go to up 200x from here, at least. Okay, that's, we've never had this before. A whole asset class is going up 200x. But that's what adoption effects do. So I went and proved it, that network effects operate perfectly in Ethereum. In fact, it operates in every one of these. In fact, all new technologies are network effect driven. So I don't believe that utilities have a zero function. Some that are badly designed may do, but most I don't believe will. The hard question is which ones are going to succeed and which ones aren't. I don't know the answer to that. So the reason I think maximalist school of thought is we all got caught out in 2017 because we bought these tokens and they went to zero. Guess what? They were all early stage projects. And if you understand how the VC world works, 80% of what you invest in is going to go to zero or go nowhere. And it's really the 20%, 10%, 5% that you make the money in. Now, Ethereum is around today. It hasn't taken out its peak versus Bitcoin yet, but it's taken out its all-time high. Will it outperform Bitcoin over time? Who knows? I think for a period of time, certainly. And I think over a longer period of time, probably. So how I look at this is Bitcoin is currently $1 trillion-ish, and the rest of the space is, call it $700 or $800 million. If I look at the equity space, or the fixed income space, or the credit space globally, they're all about 300 to 500 trillion. So if this is truly as disruptive as we think it is, which is the internet of value, then it's going to be worth something like that, if not more. Problem is what's going to get network effects and what's not. What's going to find the use cases? What's going to find the developers? I don't know. Ethereum, for sure. I mean, that's a surefire, major platform that is going to play a major part in the future. And we know it by the number of developers working on it, the number of applications working on it, and the number of wallet addresses, the rate of increase. So it's growing up about twice the speed of Bitcoin right now. So ETH's growing at about 100% a year, and Bitcoin's growing about 50% a year. The entire digital asset space growing about 113% a year, which is twice the speed that the internet grew at. So this is the fastest adoption of any technology in all recorded history. And ETH is the front runner right now. Now, it doesn't mean it always will be, but right now it's clearly winning network effects. And therefore, I think the network is undervalued.
Ethereum is also very much following the 2017 Bitcoin cycle.
ETH at 5 million wallets and Bitcoin at 5 million wallets, it was exactly the same price, and the price structure was the same. The whole space looks like it can go to up 200x from here, at least. Now, Ethereum is around today. It hasn't taken out its peak versus Bitcoin yet, but it's taken out its all-time high.